Everybody, welcome back to another video. You will not guess what happened with the Robinhood, the much anticipated Robinhood IPO. Let's get straight into it. So on Thursday, Robinhood began trading after its IPO under the ticker symbol HOOD, Hood. Great name. Now, they were anticipated to be priced between 38 to 42 US dollars, and it actually came in at 38 on the lower end of that range. So it started trading at $38 per share. That gave Robinhood a valuation of $32 billion. Now, interestingly, in the first 30 minutes, Robinhood's price dropped 5% to around $36. Now, it fluctuated. Let's see if we can take a look at the chart. Now, what you can see is it fluctuated very rapidly. This is a 5-minute candle chart. So you can see straight away in the first 5 minutes, we had a low of around 35. The 30, let's have a look there. Yep, had a low of 35 in the first candle, and then it spiked up to a high of 40 in the next 5-minute period. So you can see it's a very volatile opening day for the, what we like to call Marmite here. Some people love them, some people hate them, Robinhood. And it fluctuated throughout the day. We can see lows between 33, but now it's sitting at around 35.15 cents at the close of play on Friday. Now, few interesting things to note on this IPO with Robinhood. I mean, we know about the fiasco with GameStop, and we'll touch upon that in a little while. But just some of the mechanisms. So normally with an IPO, you have what is called a lockup period, which means some of the private investors who were invested in Robinhood in the private market have to wait 6 months before they can dump their shares. And the idea behind that is to stop the markets from suddenly taking a hit and give Robinhood a chance to operate in the public markets before people can slowly start to sell. Now, what they did in this instance, Robinhood, was they said, we're going to make an exception. We're going to allow our investors, our private investors, to sell up to 15% of their holding. And that could be one of the reasons we've seen some volatility here, as there's not been the buying power to support that selling activity we're seeing from the long-term private investor holders. Now, we need to remember that there's an interesting thing here. So naturally, Robinhood, as a business, if you look at their filings, they're doing a great job. Their users were published at 17.7 million at the end of the March period, and that's grown to 22.5. And it's clear that whether people love them or hate them, the numbers are looking good, the growth is looking phenomenal, and there is no doubt that they are providing some sort of an opportunity for inexperienced investors to get into the market commission free and to get trading without the prohibitive fees, right? A lot of people in the States are using Robinhood to get started. I think the average investor account on Robinhood is around, or the median it might be, is around $250. So you can see it's just people with a little bit of cash that want to start investing, or it's their secondary account where they're playing around with a few options trades here and there, are using Robinhood. Now, there's an interesting thing here because we've got the same issue in the UK. There's various commission-free platforms such as Trading 212. But in the States, there's a difference in the law. You can do something called payment for order flow, and that is what Robinhood is doing. So no different to how when you use Facebook or Twitter or these platforms, you think they're free platforms. Whenever there's a platform for free, we need to remember nothing comes for free. There's no free lunch in life. So what they're doing in this instance is they're selling our data, right? That's what Facebook do. That's what Twitter and these social media platforms do, and we understand that. But the same is happening with these trading platforms, in particular Robinhood. Now, this is actually illegal here in the UK, but in Robinhood, they can sell that payment for order flow. So a lot of people who looked into the GameStop saga and Citadel, the hedge fund, will understand what's going on here. And all it means is these large institutional players can pay Robinhood to see where us retail traders are trading, right? And that's what's causing, that's what's allowing them to front run the market and get that extra data. So please remember, just because you're not paying a trading fee doesn't mean that, you're not giving away something. So that's really important here. So, coming into the Robinhood IPO, I'm sitting back and watching this one. I got burnt a little bit chasing the Coinbase IPO on day one, and I've been dollar cost averaging all the way down. But, I'm going to sit back and wait. I mean, there's a lot of Marmite feelings around Robinhood. Some people love it. It's clear that their numbers are very strong. It'll be interesting to see their next earnings. Where does it come in at? But I'm going to be sitting this one out. The first year of any IPO is always very volatile. So I'm going to see how it plays out and then have a look at probably building a position slowly at the right time. Definitely an investment I'm interested in. They've definitely managed to democratize retail trading and allow the average Joe, so to speak, to get trading and start with their $250, $100, and off they go, right? So I'm definitely going to be watching out for that. I mean, we've got to be careful. They've had $70 million fine with FINRA. I know that's just a slap on the wrist given the size of the company, but it just highlights. I mean, that was the largest fine FINRA has ever given somebody. So that's really interesting. But we'll take a look at it. We'll update you next week, and we'll have a look at how it trades in their first full week. And we'll leave that there. So I'll see you guys later. We'll catch you in the next one.